Hi everyone, welcome to Thursday. And of course, every Thursday we take a look and do a share and review. Today's no exception. We are going to take a look at A2 milk. And there's something really interesting that I want to show you with A2 milk. Before I jump across, just remember that this is for educational purposes only. It is my methodology that I use when I'm analysing shares and what shares I'm going to trade and buy into. So I love to share that with you and hopefully help you on your educational journey with share trading as well. Let's take a look. Right, here's A2 milk up on the screen. And this is over a 5-year chart. You can see here, so the market is open, and I've started recording this on Monday mornings. It's just gone about midday. So the market is open. It's down about 7 cents at the moment. Let's just refresh that. Okay, you can see here, and I've got this out quite a way, A2 milk was certainly a glory share back in its day. And it sort of hit highs of around that $21 mark, and that was back in 2020. So even if I go back onto all, it'll take it out to a monthly for me, and you can see that here with that big spike. Now, obviously, we're a long way off that. We're a good 50% off that. Let's go back to the 5 years. However, where we are at the moment, that has been the highest point that this share has traded in since around February 2021, which is really good. That's really exciting. The other thing that I noticed with A2 Milk is it's recently announced a dividend. So it paid a dividend back in March this year of about 8.5 cents per share. That too is really good, which you can see here, and there's no other D's on this chart for the last 5 years. So that's what a dividend is. It's denoted by that D symbol. Let's go to the 1 year chart. There's something on here that I really want to show you, which is quite exciting. If we have a look back here, which was around February earlier this year, and you can see there's a big gap between one green candle and the next green candle, and this is on the daily chart. Why that excites me is the fact that look at what the share has done after we've had that gap up. The share's rallied, and that can be a very positive indicator for a share. Obviously, this was back in February this year. Naturally, we had a bit of a high point. We had some sell-off, and then we've gone through a bit of a sideways pattern. Now the market has started rallying again for A2 milk. Thing is, we don't have any gaps in our performance at this stage. And last week, we did have about 3 days of selling. That's something to just keep in mind and just watch with A2 milk. Going back to this gap up, where you've got from one green candle to the next, it means on a daily basis that the share closed at one point, and then there was after hours trading, either after the market had closed or before the market opened. The following day, there were orders put into the market, and it caused that gap up. And if you've got 2 green candles like that, that is very, very positive. If I go back a little bit further, you can see here around November 2024, yes, there was a gap up. The thing that is different is we didn't really have a lot of buying on that little candle that we can see there. It's only just a green one. It's only a little dot. But then there's a gap up. However, that next candle is a red candle. Now, that can be quite a negative sign. And in fact, you saw that the market really has just gone through a sideways flat patch during that period there. November 2024 through to about February this year, 2025, went sideways, and then we had that really exciting gap up, which is really cool. Now, I'll just go back to that 5-year chart, and we will pop on our moving averages and just see how that's going. So like normal, we'll use the 30 exponential moving average. And that's great. You can see here that A2 milk is definitely trading above that. It hasn't gone too far below when leading up to this. You can sort of see that it traded below it a bit around August, September last year. But then it's flicked above it, which is great. It's where if I go back to the beginning of this 5-year chart, you can see how the red line is falling and the candlesticks are well below it. That's definitely a very big negative and a time to stay out of the market, because no one knows how far bottoms will be. And to be honest, I have ridden a share all the way to zero, and this was before I learned to put in trailing stops. Now let's also put on the moving average, and this time make it a shorter time frame, and we'll make it a 15-week exponential. You can see here that yes, A2 milk's trading above both of those. That's great. Those moving averages crossed sort of February earlier this year, which is good. Went through a bit of a sideways pattern, and then we've had a little bit of a rally. Let's go back and have a look at the 1 year chart on that. And again, you can see the strong run through this period here, which was August this year. The thing is we just need to watch this is it has started to turn a little bit. The moving averages haven't crossed to the downside, so that blue line hasn't crossed through the red, but they have turned a little bit. Now, let's just keep an eye on that, because sometimes a share can move back to those moving averages and then it can rally again, but you just want to keep an eye on that because you don't want to buy a share that suddenly turns down. The only thing that I would look at on this chart here as well that is a little bit of a concern is if we go to the RSI, so that's the relative strength indicator, which is just really giving us an indication as to whether a share is overbought or oversold. You can see it's sitting at around $62. So it's in the middle. It's certainly not highlighting that it's an overbought territory. The only thing is it's pointing downwards, and that is something that we don't want. If you look back here, you can see that it's got a grey period shadow through there, which was around August this year through to early September. You can see that it was definitely in overbought territory. Now, an overbought situation does not mean oversell, as well as an oversold territory does not necessarily mean to buy. It's just something to keep an eye out for. Because you can see here, even though it was overbought, look at that strong run that A2 milk has had. The only thing too as well, just take note, there's not a lot of volume. We had some really good volume for this day here, which was 18th and 19th of August. There was some good strong volume coming through on positive candles, but there hasn't been a lot of volume following through on that. So that's something just again to keep an eye out. Let's go back to that 5 year chart. Right, I'll take these moving averages off and let's make a comparison to the main board and see how it's comparing there. You can see here that the main board is up about 12, nearly 12.5%. However, A2 milk over the same period, and this is over a 5 year period, of course, is down about 43%. And that's because it had that huge fall way back in 2020. It had that, like I said, a huge fall from grace. And that's why over the same period, it's underperforming the New Zealand market. For me, that is something that I do want to see, even though we have seen a little bit of a really good rally with A2 milk. Personally, I like to see that any share I'm going to buy is trading against or above where the New Zealand main board is trading, so the NZX 50. And I like to make sure that it's trading above there for about 5 weeks at least in a row. And the reason for that is because, again, it's the momentum. Basically, trends will always continue to follow trends. Yes, there will always be positive areas, but if it's outperforming the main board of the New Zealand Stock Exchange, that can be a good indication that it is going to continue doing that. Hey, A2 milk, like I said, it's not going to be on my buying radar at the moment. There's definitely some positive signs there for A2 milk, which is great. So for me, I would just keep an eye on it. Keep watching it. If you want to buy it, make sure you use a stop loss, determine where your exit's going to be and put that in place. And if your share keeps rallying, keep moving that stop loss up, because then eventually you will lock in profit if you do decide to invest into this particular share. Otherwise, like I always say, if worst case scenario happens and the share falls, then you've already got an exit point or an exit strategy in place. So I really hope that's helped. It's been great coming and showing you A2 milk. It's some really good examples in there. Love doing that. So if there is a share you would like me to review for you, by all means, sing out. It doesn't have to be on the New Zealand Stock Exchange. Happy to do that for you. And also, if there's anything that you'd like to know about the stock exchange as well, or anything on share trading, again, happy to do that. And in fact, I have had someone ask me about doing fundamental analysis, so I'll do a video on that for you as well in the coming weeks. Until next week, take care.